yesterday, date to me. I can be useful, not hard to believe. Oh, another fool, dream silently, and no one hear me. Like me, leave you so far. Can never tell, split it apart. Only when it's in
Good evening and welcome back to another live stream as the crypto market prepares for the Japanese bank to hike interest rates. The UK Bank of England cut interest rates today and US CPI was much lower than expected. So with just a few days left until Christmas, it looks like there will be no Santa rally this year. We're going to dive in tonight. We're going to cover a whole host of news stories. We're going to talk a bit about what's coming in the new year, what we think is going to happen with markets, what is driving price down, what is killing risk-on assets across the crypto market, and why there is some glimmers of hope in price action over the last few days that we can kind of look at for signs of revival, signs of what's to come in the new year. So make sure to drop a like if you are watching for the first time. Make sure you're subscribed. I know there's a lot of CC Pro members in, but for anyone new to the stream, make sure you drop a like and are subscribed. Let's quickly touch on Bitcoin and some altcoins, and then we'll dive into some of the news stories that will try and paint a picture for what is happening in what has been one of the most turbulent years in crypto, out with probably 2022 when we saw FTX blow up. So if we look at price action over the last couple of days, we have had a few fake moves to the upside. We've actually had 4 days where we've saw some positivity return to the market and immediately sell off in the afternoon. So we've got Monday's candle where we hit this $90,000 level before retreating. We had a bit of green on Tuesday. We did the same move yesterday and almost reached the same level today. Now, if we look back up here, last week we had a few moves into the 94k range, and we did say in CC Pro that 94k level was going to be a massive level to break. So, the reason I say there is some glimmers of hope is we are seeing some price movement. Now, these candles to me suggest that there is a lot of short sellers trying to keep the price down. We'll touch on gold and silver shortly, I think what is going on with crypto in general is kind of what's happened with silver over the years. And I think we've all seen what's happened with silver over the last couple of months. Up over 120% year to date. Huge performance in silver. And I think there is similarities between what's going on in crypto and silver. But these wicks here should give people a bit of confidence that underneath there is buy pressure. There is people want to come into the market. In my opinion, this is shorting that's causing these massive sell-offs back down to the lows. I've said it before, I feel like this entire year has been a massive simulation where they're almost coordinating everything until everybody's happy, everybody's in place, and then they could just let prices rip. Whether that be regulation, interest rates, liquidity, the kind of global macro picture, everything seems like it's being lined up for one final say, and then eventually they're just going to let markets rip. There's too much bullish headlines, there's too many tailwinds, there's too much good news that just keeps getting suppressed. And when you look into the data, it's all done by the same actors. It's done by Binance, it's done by Wintermute, and it's done by these phony headlines that we just seem to get when we think there's a bit of bullish momentum in the market. That doesn't happen by accident. Binance doesn't sell hundreds of millions of dollars worth of crypto just as the market's starting to get excited off a low CPI print, just by accident. The flash crash on the 10th of October, which was kind of blamed on Trump at one point, when actually we see that Binance removed the buy orders from the order book, they had a massive issue on their oracle, their price oracle, which caused all the market makers to basically crash. These things don't happen by accident, in my opinion. So for me, what I think is there's a clear manipulation, clear coordination, clear simulation going on in the price. And I think we've saw similarities in silver and gold over the past few years, and we see what happens when it finally gets let loose. But other than Bitcoin, I think if we go through the alts, it's kind of a similar picture to we covered last week. Most alts down pretty badly. Ethereum obviously still above the Trump winning the election price action, but most alts have pretty much retraced that entire move. If you look at Cardano, for example, on the 6th of November, it's back at that price, 6th of November 2024. So basically, outside of maybe 5 or 6 altcoins, the majority of the market has retraced the entire Trump election and 2025 pump, which is a pretty horrific stat, to be fair. I'm not going to sugarcoat it, but what it does mean is for anyone that is in like my camp, it's giving you that extra time to accumulate. Lower average buys. I saw somebody buying Opulus sub 1 cent yesterday. What an amazing buy. Opulus now, it does $1, which, 6 months ago we were probably saying was low. It's 100x. Like 100x in what, regardless of your emotions, your investment, you can't say it doesn't look like a promising project. So I think there is some really good opportunities. Obviously you have to be sensible and manage risk and whatever else, but I think if you're buying spot and you don't have a time horizon in mind, I think now is an absolute golden opportunity. Because I do firmly believe, and I've said it all year, eventually they're going to let the taps off. They're going to let the floodgates open. And when they let the floodgates open, it's going to be insane. We've saw some examples of it this year. We saw Zcash in the last few months. We saw some random coin. I think it was, even today you've seen Loopring pump 11% while Bitcoin's down. There is just random pockets of movement in altcoins. The Zcash one's probably a better example. Up 11x in 6 weeks while the market absolutely got destroyed. That shows that there is that building pressure, and once they let the cat out of the bag, it becomes really difficult to tame that. And we've also got so many bullish headlines. You've also got people like CZ and Binance saying, 2026 is going to be an amazing year. Q1 is going to be super bullish. And we'll cover some other stories tonight as well. let's jump out the chat. Let's see who's all in, and then we'll go through some other stuff that I think is interesting. Try and paint the picture like we always do. Try and shape what's going on rather than just focus on red price action. Let's see who is in. B-Don's in. We've got Jack. We've got Shiv saying the tunes are good. B-Don says bring back the 10Xs. Mate, I'd take a 2X at this moment in time. Scott's saying brutal times. Yeah. So I think the whole point is we can stare at red price charts and we can draw targets and whatever. But I think what's more important sometimes is to just have a bit more of a wider lens of the overall market picture. So we're going to cover a few things tonight. There's a few members requests from CC Pro. We'll cover that. We'll cover a bit about Swissborg and BorgPad as well. And we'll touch on a few other interesting moves in the stock market and then obviously in metals as well. If you've got any requests, drop them in the chat. If you've got any questions or comments, drop them in the chat. And if you could do me a favour, drop some likes as well. All right, let's actually start with the UK. So today, the UK reduced its interest rates. So we've got zero hedge here. So the Bank of England cut interest rates in the UK by 25 basis points to 3.75%. It was a 5-4 vote. So it was pretty indecisive. It wasn't a unanimous decision. This has less of an impact on crypto, but obviously as the majority of people that are probably watching this stream right now are in the UK, it's important to cover it and make sure that you understand your financial kind of picture just as much as your crypto portfolio. So for me, the UK is in a bit of a conundrum right now. We have growing debt, we have growing borrowing, and inflation is still above 3%. At the same time, unemployment is rising. The Bank of England's kind of stuck between a rock and a hard place. Similar to most banks across the world, they either allow unemployment to run hot, and that leads to social unrest, that leads to massive societal problems, protests. A lot of people will probably be too young, including myself. The winter discontent back in, I think it was the 70s, was caused by 10% unemployment. People were rioting in the streets, there was protests, eventually the government gets voted out. That's why you're seeing Labour politicians come out in favour of rate cuts, because they understand if unemployment starts rising, that leads to unrest, they'll get voted out. But the problem for the Bank of England is they're fighting against inflation. Inflation in the UK is, in my opinion, much higher than they're reporting. Let's just pull it up for anyone interested. So this is real inflation. So for me, I wouldn't focus on what they're saying. I would watch what the numbers are doing. If we go to, let's go to here. Let's find. There we go. So December last year to today. Up about 3%, so it's about accurate with actually what they reported recently. Their money supply is growing in the UK, but the biggest issue for me is that the public sector is the one that's driving a lot of the jobs. Growth slowing, GDP is going to be negative for the foreseeable. And that's with 3% monetary expansion. So when growth is less than how much you're inflating the money supply, that's a real issue. And what the US is doing, just to kind of paint that picture, is what they're saying is they're going to chase 8, 9, 10% growth, but they're going to get there by lighting the fuse of the fire with 3-4% inflation. But they're happy with that disparity. They're happy with growth exceeding inflation, because then everybody feels a bit wealthier, they feel a bit richer, wages go up, better paying jobs, all stuff like that. So somebody asked me to touch on the Bank of England rate change today. My opinion, the Bank of England is just trying to stimulate the economy, but they're fighting against bad policy. And it doesn't matter how loose your monetary supply is, if you continue to make bad policy, whether that be against crime, unemployment, employment, regulation, energy, all these things are going to stifle growth, no matter how loose your currency is. The taxation's a real burden for a lot of people, which is why we get so many requests to talk about Dubai. But ultimately, it's not even a personal thing. Ultimately, the Labour government is stifling growth and causing the real economic issues in the UK. And the Bank of England can keep lowering rates. It's not going to make a difference. It's just going to maybe paper over the cracks for a bit of time. And realistically, what difference does the Bank of England rate make unless you're renewing a mortgage? It doesn't matter on a day-to-day basis when it's a quarter of a percentage point. It's not like people are suddenly better off because they reduced the rates by a quarter percent. You're still in the same job, you're still getting paid the same amount. Yeah, your interest on your credit card or your loan might have went down a little bit, but a quarter percent, it's not going to change. And anyone that does save is now getting a little bit less. So yeah, that's my thoughts on it. I'll probably go to do some more content on the UK in the coming weeks, just because we do have a big UK audience, and I think people are genuinely worried about their economic future in the UK. And we don't talk about it a lot, simply because crypto's less impacted by it, but I'll drop some more content in the next few weeks to cover it. Let's see what Shiv's saying. Some coins at all-time lows. Yeah, crazy buy opportunities. Alvara's retraced all the way. Yeah. And Bidon saying the only reason he's still here is because of crypto. Yeah, well, I think at least you're investing. I think the only way to get out of some of the issues is by investing. So you're ahead of most people. Most people randomly in the streets just do not invest. They don't either have the financial education, or they just it's not taught, so they just don't understand it. All right, let's not talk about the UK too much. Let's jump through some crypto headlines, which I think will start to paint the picture of where I'm going with my thesis for next year. So this is Scott Bessent. So Scott Bessent saying today that they are removing all regulatory obstacles for crypto, and Coinbase, Ripple, A16Z, who are a big VC firm, are already in meetings with senators to work on the market structure bill, with regulation and the Clarity Act coming very, very soon. For me, this is the key. Regulation is going to be the key. Here we've got White House advisor Hassett, who is one of the frontrunners for the new Fed chairman, is saying that he wants interest rates lower. I believe that the Fed made a mistake this week by not cutting, by not cutting 50 basis points. I think the US economy is sleepwalking into 7, 8, 9% unemployment because of AI, and I think at the same time small business and the consumer is getting absolutely crushed, and they need lower interest rates, and I think that will happen in 2026. If we look at the Kobayashi letter, so gold futures over $4,400. Gold is now on track for its best year since 1979. Anyone that knows history knows the 70s were very, very turbulent. That's when the US came off the gold standard in the first instance. They started devaluing the dollar. They had a massive oil crisis. So, yeah, history doesn't repeat, but it does rhyme. And gold surging to new highs is a clear warning sign for what is about to come. And if you think about what happened in the 70s, was the start of debasement of fiat currency was basically born in the 70s from them removing themselves from the gold standard. And this is why the Hassett thing is interesting, is Trump has said that the next Federal Reserve chairman will be somebody that believes in lower interest rates. So obviously Hassett is out there talking about lower interest rates, makes it a good shout that he might be the new chairman, which him or I can't remember the other contender, but either one believes in cheaper interest rates. I think Hassett might be the one that's an ex-Coinbase chief exec. So yeah, I think there's big opportunities coming. And Alex from Swissboard basically sums this up. US unemployment is rising, CPI inflation is lower than expected. That means that rate cuts are back on the table. Now, if you remember the FOMC a few weeks ago, they said they weren't convinced they were cut in January because they were worried about inflation. Well, today's print, and by the way, I don't believe CPI inflation is even close to 2.7%. This is just the numbers they tell people to make them feel good and give news readers something to talk about. Inflation is a completely fugazi thing. If you knew, or if you've ever watched how they actually work out US inflation, they literally send people into shops to find the same items that they tracked the month before. Like, it's just a crazy mental system. But the point is that the biggest fear for the Fed right now has to be unemployment, and their only way of fixing that is by rate cuts. The Fed is powerless to unemployment. The Fed really can't do much. All they can do is reduce the interest rate and reduce the yields on borrowing debt, so that businesses hopefully can take that cheap capital, build a business, and hire people. That's all the Fed can do. Like, the Fed can't magically create jobs, but they have this function where they almost get blamed for unemployment, regardless of what policy decisions other people have made. But they also don't want to be responsible for a massive unemployment rise. So they're going to pump liquidity into the system to try and fight that. And then you've got this chart just showing that while silver's up at new all-time high, it's absolutely flying. It looks like it might cool off. But even after the breakout, if you factor in inflation, silver adjusted for inflation is still 80% below its peak in 1980. So I need to dive into this chart and actually see if I believe it. But given how much money printing's went since then, the dollar amount means nothing really. A 1980 $100 is worth what, 100, probably 150, 160 real dollars in today's money. You need the same amount to buy the same stuff, maybe even more. So yeah, I don't know how much I believe this chart, but I need to dive into it. But interesting and something a bit different. All right, let's dive into some of the charts and we'll look at what's going on across crypto and some metals. So basically all that was to show that money printing's happening, QE is coming, Trump wants lower rates, and unemployment's a massive issue. Right now we are seeing the DXY break down. So let's go to the weekly time frame. So on the weekly, you see this trend line which dates back to 2011. Well, in here in 2021, we had a bit of a double bottom, and then the DXY obviously shot up as interest rates started to rise. Now, this double bottom here, we were obviously at 0% interest rates during COVID. The Fed then signaled that they might have to start slowing the QE that they were doing, which was fine. Dollar strengthened. But then what really happened when we broke out of this double bottom was the Fed signaled that they were going to start hiking rates in 2022. Now, that caused Bitcoin and crypto to sell off at the end of 2021, and the DXY pumped because the dollar was getting stronger, because the Fed was the first central bank to say the game's over. Too much QE, too much low rates, we're going to start hiking rates. And then you can see it pretty much went vertical once they actually began. I think it was around March. Yeah, so January they signaled that they were going to start cutting. 2022 March, that's when it went vertical, as the Fed actually hiked way more aggressively than they had planned, and you can see the dollar then surged to what is also a trend line which dates back to 2015. Now we are seeing a very similar pattern play out. We saw come down to the trend line, double bottom, but the difference this time is we're not getting that follow through, and instead of going into a rate hiking cycle, we're about to go into a rate cutting cycle. The reason that's important is all through here, if you remember so far this year, we have saw so much bearishness about the economy. There's going to be a recession, Great Depression, tariffs are going to bring a collapse of the stock market. All these things led people to be bearish on long-term rates being cut. The market just didn't believe that Trump was going to lower rates. They didn't believe that QE was coming. The markets just thought that the Fed was going to have to fight inflation, and they were going to have to actually put rates up higher. Well, now The market's starting to realise that no, rates are going lower, they're going lower fast, QE is back, and that's going to weaken the dollar. And at the same time, you've got the Bank of Japan overnight tonight will hike rates to the highest rate in years. The DXY is a measure versus other currencies. The reason this is so bullish for risk assets is when this line snaps, this trend line dating back to 2011, it'll be the first time this trend line is broke since 2011. That's a massive breakdown in price. When long-term trend lines break, that is a massive change of market dynamics. It signals huge capitulation. It's going to signal massive risk on sentiment. And it's going to tell everybody that's sitting on the sidelines, hiding in gold, hiding in money markets, trying to stay safe from risk, that it's time to come back to the party. Risk on is back. The Fed's going to pump markets. And any asset is going to absolutely fly in 2026. So, I guess a lot of this is macro. It's you can take it any way you want, but what we do know is, everybody knows, is when the DXY dumps, is good for risk on. We've had this period in here where we dropped, and you saw the stock market go to all-time highs. Crypto actually had a semi-decent start to the year. Take out April, we actually put in all-time highs. Bitcoin was at all-time highs. But the break of this level here, this trend line, in my opinion, is going to be the big signal. And when that happens, that's when I think they're going to coordinate everything. Regulations going to get passed. ETFs are going to get passed. We're going to see people come out bullish on crypto again. We're going to see institutions starting to buy Bitcoin, bigger institutions, not just MicroStrategy. We're going to see more announcements, and everything is going to go crazy all at the one time. And to be honest, it's actually there in black and white if you want to go and read about it. You've got Trump talking about lower rates. You've got Scott Bessent saying that the economy is going to be the hottest it's ever been in 2026. You've got Trump announcing tax refunds for Americans up to 10 grand, I think he said. Like, these are crazy numbers. And the biggest risk on that's going to benefit is the crypto market. Now, the reason crypto is going to do so well out of it is because the US is going to need somebody to buy its debt. And the person that's going to buy that debt is every stablecoin issuer. That's why the US is so bullish on stablecoins. In my opinion, the reason we are seeing the delays is because yields have actually behaved okay. Trump and the team actually don't want to use their hand too early. But I believe that stablecoin issuers, when the crypto market pumps, stablecoins issue more stablecoins so that people can buy. Every time stablecoins get issued, they have to go buy more government debt. The US almost doesn't need them to buy the debt yet. Once yields start to spike, that's when they'll need new buyers, and that's when they'll pump crypto to drive stablecoin demand, which will drive government debt demand. It's all a game. It's all a big charade. It's all a massive simulation. The good thing for us is we're on the right side of it, because we know crypto is going to fly. There's going to be trillions that come out in the market. The market cap is going to hit 7-8 trillion at least, and what you've been holding, what you've been buying will pay off in the long term. It's been a tough year, but good times are coming, and it's all because they absolutely need crypto to fly, to buy the debt. So that was a bit long-winded. Drop some questions in if you want me to go through stuff. I'll take a run through the markets, and then we'll come back and see if we've got some questions. Overall, everything is shaping up for a massive 2026. Q1 in particular, I think, is going to be very bullish. I think the next 2 weeks, I don't expect much market movement. I think if we move up, we'll probably retrace it the first week in January, simply because Wall Street aren't going to be left behind. But if you look at the news, if you look at some of the big company announcements, Coinbase had a massive announcement yesterday about tokenized stocks. You're seeing regulators starting to meet a bit more regularly. You're seeing ETFs getting approved. These things won't happen at tops. And if we're about to go into a bear market, institutions aren't buying at $86,000 Bitcoin if they think we're about to retrace 40% and go into a bear market. It just doesn't happen. And it's the same with the XRP ETF. If you look at XRP, everybody's disappointed by price action, saying we're going into a bear market. But the XRP ETFs just bought over $1 billion worth of XRP over the last 3 weeks. They wouldn't be buying if they thought XRP was about to go back to sub $1. They would wait. Like, these institutions don't buy tops. Why would they? They buy bottoms. They start to buy at bottoms. They're not buying. Like, if the ETFs got approved last December, they're not going to buy Solana at $300. They're going to buy Solana at $120. So all this market manipulation to get prices down is because that's where the institutions want them to buy in, so that when all these ETFs get approved, they can go and scoop up cheap crypto. They're not going to buy. Like, we saw it with the Bitcoin ETF. Like, look what happened after the Bitcoin ETF. I think it was January 2024. Bitcoin pumped to 50k pretty much, got sold off. The ETF went live that week, and then we've never looked back because institutions buy bottoms. That was the lowest they could get in, and they actually needed price to be a bit higher than the proper bottom because there wasn't enough liquidity. So anyone that tells you that we're going into a bear market is just deluded. Like, there's no chance institutions are buying just before crypto goes into a prolonged bear market. It just doesn't happen. Smart money buys bottoms, retail buys tops. That's how it works. Simple, basic stuff. But in the emotions, people get caught up in their emotions. So people see somebody that they like on Twitter, or an influencer that they followed for years saying we're going to a bear market and here's why, and then it doesn't matter to them. If you sell, why do they care? They just sit and chill. So that's my theory anyway. Let's see what is happening around the market. Alright, so let's have a look at Bitcoin dominance, still in this range. I think this will break down. There is a lot of chat that this Bank of Japan rate rise tonight could actually be a bit of a almost like sell the rumour, buy the news. I'm not convinced much happens this side of Christmas, but I'd love it to. But I won't be betting on too much price action over the next 2 weeks. Tether continues to make all-time highs. So what we were showing in CC Pro was we have stablecoin market cap at all-time highs, the highest it's ever been, especially if you consider Tether. But you've also got dominance breaking to new all-time highs. So not only do we have 9% of the crypto market in stables, that 9% represents a bigger financial impact on the market than ever before. So when this turns, when we do get that dominance drop, there's more capital to go and buy crypto. So that is where a lot of the market move will come from. You've obviously got 8 trillion in money market funds that are sitting on the sidelines. As soon as they wake up to the fact that inflation's going to be allowed to run hot, they're going to chase gains, and it's going to be in crypto. Big news this week, Tesla, new all-time high. So anyone that's been watching the channel for a while knows that back in March, I think it was the 23rd, I posted in CC Pro Alpha, which is our premium member section with alternative investments. Also posted on X that I was buying Tesla because the FUD around Elon Musk was just insufferable. Everybody was calling for the collapse of Tesla. It just was never going to happen. And we are now up, well, at the top, we were up 100%, which on a stock is a pretty nice gain. And I think it goes much higher. I think he's still got to deliver on robotaxis. Optimus is coming. I think the stock goes much, much higher in 2026. Yeah, I think you bet. I just don't understand why you would bet against Elon and his companies. Whether you like his politics or not, it doesn't really matter. That's not what investing's about. Investing's about making money. And when you look at Tesla as a company I don't really understand how you bet against it, but that's just me. Russell 2000 this week back at all-time highs. We did dump down below this previous all-time high. Looks like we're recovering as we go into the end of the week. Closing up here for the week would be pretty bullish, I'd say. And then metals absolutely flying. So gold right now sits 1% from all-time high. I think gold goes higher. I do think there's an argument that metals cool off in 2026 for a while, but I actually don't think it's going to be a dump. I just think it's going to be like a slower grind higher. I think it like maybe something like this period here, where we kind of trade sideways for a while and then slowly grind up into the right. And the reason for that is I think metals are signaling what's coming. If you look at who's buying a lot of the gold and silver, it's either major central banks, big banks, or major companies. That's smart money. They're buying because they know what's coming. And I think we've saw a crazy move from gold over the past year. Look at the 12-month candle. It's just insane for gold. It's what, $35 trillion market cap now, 64% move in the year. Insane. And silver, I'm sure, is up over 125% now. Up, 126% for the year. Huge performance for silver this year. If you've been watching our stuff for a while, you'll know we've been calling it from ages ago. Probably in this period here. This was my last major buy. Down at $27. I don't think we'll go back there. I don't think we'll ever go back to $27 silver. I think silver has so many use cases. Supply's tight. I also think people are waking up to the kind of hard money argument, so that's why gold and silver will start to do well in a retail crowd as well. I think huge moves for the metals. And the only thing I would say is, and I shared this with somebody the other day, is when if you're buying physical silver, just work out the actual dollar amount you're getting. I did one with a UK company the other day, and by the time you factor in VAT, fees, and delivery, the silver was working out at $95 an ounce, which means I would need silver to appreciate 50% from here just to break even. But then if I wanted to sell that silver, they were offering me like $62 an ounce, and I had to pay to send it back. So actually, I mean, it's not going to cost me a lot, but it just means that the spread is so huge in physical silver, especially in the UK and Europe, that you just need to be careful. Just watch the number you're getting, because they quote spot in dollars, but then the price of the bar in pounds. So just be careful. Make sure you're actually making money on it. That would be my only advice. Coinbase, Robinhood, I think they both do all-time highs in the new year as well. Pretty bullish on them. All right, let's jump out the chat. Before we do that, if you're new to the stream, if you've not watched before, we have a private members community called CC Pro. It's a Discord, has daily members updates, members only streams, a newsletter, the podcast. We've got loads of content that we put out every week. We do kind of like a crypto market report every Monday, which has replaced the newsletter, and it's actually just sets you up for the week. It kind of highlights what happened last week, what's coming this week, any big macro events, and it just gives you a bit of a head start to the week. These things, I see it a lot. People compare news analysis around the internet. The biggest thing about CC Pro is it's a community, but also we're invested in the market. So we're telling you when we're buying, we're telling you when we're selling. Dom posted a few weeks ago that he was buying, I think it was 2 weeks ago actually, he was buying at Alvara. Alvara was up over 150% after that. But we post our buys and sells. So yeah, if you're not involved, if you've never been in, I will drop the link in the chat, and you can get involved. Right, let's see who is asking questions. Bidon, what are you thinking? We'll get a bullish January. Anything will spark it? Yeah, I think everything that I've kind of spoke about is the spark. I think early January. I think the markets aren't. In fact, I'll find out if I'm right. I think the markets are underestimating, and by markets I mean Wall Street. If you remember this year, and the reason I feel confident saying this, yeah, if you look, the markets are still not pricing in a rate cut in January. Unemployment's going to be higher in January, and we've just got a low inflation print. So the only concern of the Fed should be unemployment right now. By then, Trump will announce his new chair who wants rates lower. So I think the markets are underpricing rate cuts in 2026. The markets have missed, by markets I mean Wall Street economists, smart money. They've missed almost every move in the stock market this year. They were bearish in April because of tariffs. The stock market went to all-time highs. The stock market corrected and literally bounced within a week. They have been bearish on metals for as long as I've known. Wall Street's always bearish on metals. Gold and silver have absolutely flown this year. The stock market uses the same data as the Fed. They're backwards looking. They're worried about things because they have a political view as well. I think the stock market are completely underpricing what is coming in the next year through Trump's policies. You've got the Big Beautiful Bill, you've got the Clarity Act, you've got new Fed chair, you've got QE, which has already started. It only took them 10 days. And I think once they wake up to what's coming, and what's coming is that inevitable money printer, that inevitable liquidity, which ultimately is not going to stop. It's just going to ramp up next year. Once they actually accept that and wake up to it, I think that's when the markets fly. But right now, I think they're just underpricing what is about to happen. I think they're also claiming the move in gold is because unrest, geopolitical stuff is not. The reason gold and silver are moving is because they know, central banks around the world know, there's going to be a global debt crisis and hard assets are the only way out of it. And that's why they're all scooping up gold and silver. But more importantly, that's why they're all demanding physical. And that's what's causing the short squeeze, especially in silver. Because for so many years, people just traded paper contracts for silver. Now banks are demanding the physical, and that's what's caused the price rally over the last few weeks. Let's see, Bidon. Yeah, there is a good chance, to be fair. Jamie, I'll come back to your question. There is a really good chance that this level in here does get hit. I think people still expect it to be hit, and that makes me negative on it actually being hit. I think this wick probably does get filled over Christmas. It would make perfect opportunity. Crash prices down to 80k. Everybody's expecting 74k to get hit, and then they reverse the market and it pumps into the new year. Something like that could happen. I would say there's like a 30% chance we get to 74k. One, because so many people think that would cause MicroStrategy an issue. And when the market believes a price point could punish an actor, it generally moves there. So if you remember, what actually sparked a bit of the Terra Luna crash was Terra Luna, somebody at the team. No, sorry, not the Terra Luna crash, the FTX crash. What actually capitulated to FTX in the end was somebody at FTX came out and said no matter what happened, they would defend the price level of the FTT token. Well, CZE and Binance just absolutely crashed the price through that level, and FTX didn't have the funds to defend the level. When you make public a big level, markets normally go after it. And everybody thinks 74k is going to cause a problem for MicroStrategy. So it wouldn't surprise me if they tested that theory in the next few weeks. And at that point, everybody would be screaming bear market. It's over, it's done, it's never recovering. And then all it would take is one, MicroStrategy to show some strength, the US government to take a stake in MicroStrategy, which I think is very likely, MSCI maybe not remove MicroStrategy from the index, and then markets return and bounce back, and then we go up to all-time highs. That could be a narrative, that could be a storyline, but we could also see that, you know, this Japan thing's completely overhyped. We'll find out, I guess, over the next few days. Altcoins are absolutely getting crushed. Solana down at 118, lowest level since April with the tariff debacle. So I get why there's a lot of fear. And if you're new to the channel or you're just tuning in, and you've probably heard me say similar stuff before, my job isn't on here to be one way or another. What I'm saying is altcoins are getting crushed. I understand why there's fear in the market. I'm not belittling people that are scared and want to sell. I just think it would be an absolute disaster if you did it, because I've seen it so many times before where people sell in fear, and it's kind of like the institution thing is, you know, we've just had 2 or 3 Solana ETFs go live in the last few weeks, a couple of XRP ones. They're not buying tops, they're buying bottoms. They're going to drive price down to buy more, and long term it'll be bullish. It's just we kind of have to suffer. Let's see, Scott. I don't think they're allowed to advertise in the UK. To be honest, most of Swissborg's campaigns are excluding UK investors, which is disappointing, but it's not their fault. It's the FCA. Xborg launched a new Earn campaign. Don't think it's available for UK users. There's another couple of Earn campaigns on the Swissborg app right now, not available to UK users. However, if you have set up in Dubai or you've got a visa somewhere else, then I would thoroughly suggest changing your KYC so that you can take advantage, because they've got some really good products, really good Earn products, and obviously Xborg is something we talk about a lot. Earning free Xborg is a no-brainer in my opinion, especially at these prices. So Jamie says Trump said he was giving all 1.5 million people in the military a check for $1,700 for Christmas from the money generated from tariffs. Here's all hoping that... Yeah, I think one of the things you're going to see in the next 12 months is Trump basically buy votes for the midterms. Now, whether you like Trump or you don't, every politician does it. But for me, what he's came into power to do is fix the affordability crisis in the US. If you ask the average American right now, he's doing a terrible job. But I think in the next 12 months, we're going to shift that. I've spoke about it a lot on stream where I think most presidents come in and they want the first year to be rosy, get off to a good start, get people on side, basically bribe them a little bit with a bit of cash in the economy. Trump did the exact opposite. Trump came in and literally caused mayhem in 2025. Completely went against what everybody else does. Now, you could say, well, Trump doesn't care, whatever. Trump cares. Like, he's got an ego. He wants to be liked. He wants to, whatever you think of Trump, Trump wants to be liked by people. He just knew that at some point that pain had to be felt. And I think he just front ran it, get out of the way in 2025, and then every bit of commentary you see from a senior advisor or Trump talking about the economy, all they keep saying is 2026 is going to be the biggest year in American economy. They're talking about like 8-9% GDP. If he pulls off even 6% GDP growth in 2026, he'll be loved and he'll fix a lot of the problems that have been caused. Now, he's not Superman. He's not going to fix the debt crisis. He's not going to fix inflation. They're going to print and they're going to hand out people money, basically, in stimulus checks, in rate cuts. That's what they're going to do. He's still a politician. But I do think he'll win a lot of support in 2026. And again, Wall Street will be on the wrong side. The bears will be wrong again because they're betting that the Democrats, if you look at Polymarket, I looked at it earlier. I don't have it up, but let's see if I can load it up. I'm pretty sure the chance of the Republicans winning the midterms is like terrible. It's actually good odds. If you've not used Polymarket, you can make some decent money. Yeah, I can't find it. I looked at it earlier. But if you search for it, I'm pretty sure the odds of the Republicans winning the midterms is pretty low. I think that's wrong. I think they're going to buy the win. So yeah. Let's see what else. So Shiv says, why does Dex say that Swissborg is safer than cold storage? So obviously I don't want to speak for Deck. I'll speak for my personal opinion. Swissborg has the backup of support. Cold storage doesn't. I know tons of people. I've heard so many bad stories of forgetting passwords, binning a hard drive. Like, cold storage is great if you buy Bitcoin and you're a quite security conscious individual. You keep the ledger or whatever you use in a safe, or you keep it somewhere safe and you know how to use it, and maybe your partner or your mum or somebody else knows how to use it. If you are the only one that controls your cold storage, you're the only one who knows where it is and how to access it. What use is it if something happens to you tomorrow? What happens if you've got like even 2 Bitcoin on it, and in 10 years that Bitcoin's worth $1 million each? Nobody can access it because they don't know how to. What if you fall and bang your head and forget the password, or you don't record it, or you lose it, or you move house and you forget it, or you drop it in the street, or somebody chucks it out because they think it's a old USB drive? That's what I think he means, is the liability issue of cold storage is almost too much for most people. I understand why a lot of people use and store all their crypto on centralized exchanges, because it's a nightmare for newbies, for beginners, to use MetaMask, Ledger, 12-word seed phrases, massive wallet numbers, different chains. These are all massive complexities of crypto that are a challenge for most average people that don't have hours a day to study how to move crypto on and off different exchanges. How many CC, I think Shiv, you're in CC Pro, so how many people have messaged before saying, I sent Tether from BloFin to Swissborg, but I sent it on Polygon chain or Arbitrum chain or on Base, and Swissborg doesn't accept that, so I've lost my Tether, or I can get it back but I need to pay $200 to get it back. It happens all the time. It happens probably daily, but just people that DM me, wrong chain, wrong contract address. So crypto's complicated. Crypto's not easy. Sometimes we become desensitized to it because we do it every single day and we talk about it and we're in that space all the time. But I completely understand what DEC means. I think Swissborg is so safe. They use, it's not like a centralized exchange either, so that your funds aren't commingled with everybody else's unless you opt into a strategy. But like if you just hold Bitcoin on Swissborg, it's in your individual Bitcoin wallet. But you've got support. You've got retrieve my password, show your ID, and they do have an actual person you can speak to. Now, would I trust? Part of the reason I think prices keep getting manipulated is because people like Binance are using customers' funds to dump prices. Would I leave 90% of my net worth on Binance? No, I wouldn't. Would I leave 10% of my net worth on Mexi? Definitely not. So you have to work out your risk tolerance, work out who you trust, and we've used Swissborg for 7-8 years at this point. We've saw some bad things happen in crypto, and Swissborg always comes out well. I think even with the recent hack on Solana, they're still paying people back. Like, it might not be ideal. The third party got hacked. Swissborg never got hacked. It was Kiln that got hacked. Swissborg are covering the cost. They're repaying people. Okay, it might be over 3 years, but like, they don't have to. They could literally just say, sorry, wasn't our fault. That's what happens in crypto. But they're not. They're paying people back. So they time and time again prove their trustworthiness. That's why we trust them. But if you are in crypto and you are comfortable with using ledgers, seed phrases, and all that, then use it. It is a tool. It's useful. But the average normal person that wants to buy and hold a few altcoins, probably it's above their pay grade, and they should probably just leave it somewhere like Swissborg that they trust. Appreciate that, B Don. Thank you very much. Now, I've realised that we've been on an hour. I've raced through a lot of information there. We've just started one-to-one calls with myself. We've done quite a few in the past 2 weeks. I've actually really enjoyed them. So shout out to the members, or they might not actually all be CC Pro members now that I think of it. But the calls are great. It gives me a chance to interact a bit more personally with members, followers, people that tune into the live stream. I can help you out, discuss your journey, discuss your goals, and really give you some helpful advice. I had one yesterday. It was all about setting up TradingView, indicators, how to set alerts, how to take longs and shorts, how to map it out on TradingView. Literally an hour just going through TradingView, setting them up so that they can now start putting their own trades on and actually understand price charts. If that's the type of thing you want to know, or you want to ask a question about an altcoin, or a question about dollar cost averaging, something like that, I'll drop the link for my calls in the chat. My calendar is actually filling up over Christmas and New Year. I don't know if people have a bit of time off and they've got a bit more time to focus on it, but I'll make myself available if I can for anyone that wants to book a call. The link is in the chat right now, and yeah, get booking, because I think 2026 is going to be a massive year, and the last thing you want to do is not have a plan or have some goals, or just understand as much as you can about the market. The best investment you can make, cheesy as it sounds, is in yourself and in education, and hopefully that's what we can offer, whether it be CC Pro or whether it be through these calls or these live streams. So with that said, that is all for tonight. Thank you very much for tuning in. I know it's been a rough week or so. Price actions failed to deliver what we want, but I do think it's all shaping up for a very bullish 2026. I think Q1's going to be insane. I hope everybody's ready. I hope you're taking advantage of these prices if you can. I think it's just a matter of time before the pressure cooker takes hold and some of these prices absolutely explode. We've saw it across the market. I mean, Borg just a few months ago was up at 68 cents, now down at 25. You know, there's a 3x before the market even heats up. LimeWire down at 3 cents, done 185. I could go through the entire market and pick out some amazing opportunities. All right. Thank you very much for tuning in. If you're in CC Pro, I will catch you there. We will be back with some, in my opinion, amazing content over the next week or so. Everybody should be off work, so they'll have plenty of time to consume some videos that we'll be dropping, and I'll be back very soon. All right. See you soon.